All right, welcome to The Explainer. Today we are diving into the absolutely wild world of financial bubbles. But forget Wall Street for a minute. To really get what's going on, we're heading deep into the jungle for a little story about some monkeys, a whole lot of bananas, and a brand new currency: leaves.
So here's how we're going to break this down. We'll start with just a monkey and a banana. See how that explodes into the great banana mania. Then look at what really fuels the fire, something called leverage. After that, we'll watch the whole thing pop and wrap up with some key lessons from the jungle.
Okay, part one, a monkey and a banana. Every big story has a simple beginning, right? And this one starts in a totally normal, logical world, before everything goes completely sideways.
So, in the beginning, life is good. The jungle economy is simple and it makes sense. A monkey wants a banana, it costs one leaf. That's it. Why one leaf? Well, because you can eat the banana. Its value, its actual worth, is tied directly to what you can do with it.
But then, one monkey has this little thought, this what-if moment. What if this banana is worth more tomorrow? And just like that, everything changes. The banana isn't just food anymore. No, now it's an investment. It's an opportunity. And that one tiny shift in thinking, well, it's the spark that's going to light the whole jungle on fire.
And that brings us to part two, the Great Banana Mania. This is where that one little idea starts to go, well, bananas.
And what do you know? The very next day, the price doubles. 2 leaves for a banana. That first monkey was right. The word gets out fast. Suddenly, other monkeys are jumping in. Not because they're hungry, but because they think they can sell that banana to another monkey for 3 leaves tomorrow. It's all about the quick flip. And the momentum just builds and builds. Pretty soon, we're at 10 leaves. Think about that. The trading gets so frantic that a banana is no longer just a piece of fruit. It's become the hottest, most talked about asset in the entire jungle.
And then, boom, 50 leaves. This is where the real mania kicks in. Every single monkey wants in on this. The price just skyrockets. And at this point, who's even thinking about eating the banana? Nobody. It's all about making more leaves. The greed is real.
I mean, just look at this. The price absolutely explodes. We're talking from one measly leaf all the way up to 100. And the whole thing is built on just one idea, one belief, that no matter how much you pay today, there's always going to be another monkey willing to pay more tomorrow. So what's really driving this madness? It's not about logic or numbers. It's pure monkey psychology. You've got 2 huge forces at play here. First, there's FOMO, the fear of missing out. Every monkey sees their friends and neighbors getting rich off bananas, and they think, I've got to get in on this or I'm going to be left in the dust. And that leads right into the second driver, classic herd behavior. You know the saying, monkey see, monkey do? When it looks like everyone is buying bananas, your brain just tells you it must be the right move. It feels safer to go with the crowd, even if you don't really get what's going on. I mean, the whole jungle can't be wrong, right?
Okay, next section. So we've got a mania, but how does it get supercharged into a massive, truly dangerous bubble? Well, it's time to introduce a powerful little tool called leverage. This is the great accelerator.
So what is leverage? Simply put, it's using borrowed leaves or borrowed money to make way bigger bets than you could with just your own stack. The monkeys start going to the jungle bank, borrowing piles of leaves so they can buy even more bananas. If the mania was a fire, leverage is like dumping a whole tanker truck of gasoline on it.
And here's why it's so tempting. Look at this comparison. Without leverage, if the banana price goes up 10%, you make a 10% profit. Makes sense. But with leverage, say you borrow 9 leaves for every one you put in. That same 10% price jump gives you a 100% return. You double your money. The gains look incredible. But here's the catch. The risk on the downside is just as huge.
And that's the terrifying thing about leverage. You're walking a tightrope. The market doesn't need some catastrophic crash to ruin you. All it has to do is wiggle a little bit. Just a small dip in the price can be enough to wipe you out completely. One day you're a genius, the next day you've lost everything and you're in debt to the jungle bank.
All right, part 4. What goes up must come down, right? We've hit an absurd peak of 100 leaves for one banana. The hype just can't last forever. And now the panic is about to set in.
And then it happens. Maybe one monkey gets hungry. He looks at his mountain of bananas and suddenly has this crystal clear thought. Wait a minute. This is just a banana. I'm supposed to eat this. They grow on trees everywhere. And in that one moment, the spell is broken.
The collective dream that this thing is worth 100 leaves just shatters.
And what follows is a total catastrophe, a death spiral. It starts with a small price dip. That's all it takes. The banks get scared and they call in their loans. They want their leaves back now. All those monkeys who used leverage, they have no choice. They have to sell their bananas to pay the bank. But when everyone sells at once, what happens? The price crashes even harder, which forces more selling, which crashes the price even more. You see where this is going. It's a vicious, self-feeding cycle of pure panic.
Okay, we've seen the crazy rise and the even crazier fall of the banana market. So, let's get to the final part. What did we actually learn from all this? What are the big lessons from the jungle?
Well, what's fascinating is that this story reveals a pretty predictable pattern, a life cycle that almost every financial bubble follows. It starts with discovery, some new exciting thing. Then comes the mania. That's when everyone piles in, sure they're going to get rich. Then reality bites, and you get panic. And finally, you're left with the aftermath, where, a few clever monkeys who got out early are happy, and pretty much everyone else is left holding a bunch of worthless bananas.
So how can you and I spot the next bubble out in the real world? Well, you've got to look for these red flags. Number 1, when it seems like average people with no experience are suddenly making a killing. Be wary. 2, when you see tons of borrowing, tons of leverage, all pouring into the same asset. 3, and this is a big one, when everybody, and I mean everybody, starts saying the price can only go up. And finally, ask yourself, is the price totally disconnected from what this thing is actually worth in the real world?
And that really brings us to the final, most important question, doesn't it? Because this story, it's not actually about monkeys and bananas. It's a mirror. It's about us. So when you look around today, at the stock market, at crypto, at housing prices, whatever it is, you have to ask yourself that one simple question. Am I buying this because of what it's truly worth, or am I just betting that some other monkey is going to be willing to pay more for it tomorrow?